How are you
We're
guys?
doing well. Excited to have you on for a number of reasons. I think Colosseum's obviously been a mainstay among early stage startups for a while, and then you and Jess got into it around Future Key a little bit. So excited to kind of hit on both those things. So you're the co-founder of Colosseum, which is a leading Solana-focused hackathon, accelerator, and venture fund. So wondering if you could just maybe paint us kind of the holistic picture of how the hackathon, accelerator, and venture fund come together today.
Yeah, for sure. So I used to work at the Solana Foundation for about 4 years, and one of the things I was in charge of was running just hackathons for the ecosystem. And it turned out that the way that we had sort of evolved the hackathon was to be much more akin to like a startup competition, where it's not like an ETH Global event. It's much longer. It's about 6 weeks long. It's much more structured as like a product sprint to go to market with your startup for the first time, and so that just kind of grew and grew and grew to the point where it just got big enough where it made sense to kind of attach an accelerator to help kind of carry the best founders forward coming out of that event. And then we raised, an external venture fund to help give them a little bit of pre-seed capital to get off and running. So myself and my two co-founders, Nate and Clay, started that last year, closed our fund last year. And that's kind of how it all fits together. So we basically just choose the top 10 to 15 teams coming out of every hackathon, put them through an accelerator program. Half of it's based in San Francisco in all those teams.
Nice. I think we lost you briefly there, but you're back. Okay. You're back now.
Great. All right.
Are you in San Francisco right now and leveraging the San Francisco internet?
I am not. It would be much better if I was in San Francisco. I'm in Florida. Not known for their
oh no.
internet speed, but
I think we're just going to be patient with the little delays that'll happen.
Yeah.
Sorry.
No, we're good. We're good.
Yeah, all good, man. This is the internet show. We get to be privileged enough to do this and deal with a little bit of hiccups every once in a while. So I'm really curious about sort of where you're finding the most. I think the idea behind hackathons, I think, as sort of growing the top of funnel for founders coming into, say, a venture fund or into an accelerator, I think is one of really breadth, right? Being able to get a lot of maybe early movers, new folks coming to the space, folks that are really early in their product journey. And my sense is that a lot of the unlock here in crypto is scaling this globally rather than being limited to, say, the San Francisco or Miami, I guess, if that was a thing for a little while. So I'm curious where you're finding the most traction. Like, where are these developers coming from? Are there pockets of the world here that are just off most people's radars that you guys are finding a lot of success in?
Yeah, sorry, you guys broke up for a sec, but I think I heard the question. It is a global event. It's online only. And I would say that, the beauty of it is that anyone with sort of an internet connection, no matter if you're in a startup ecosystem or if you're trying to get to one, you can, prove yourself, right, through this competition. And there's across, I would say, Southeast Asia, a little bit of more and more East Asia and Europe. And so occasionally you get someone from, Brazil or the one-off person from Hungary or Poland or something. But those are kind of the main regions that we see talented founders from. But again, it's global. So you see there's a team in our first batch that was from Pakistan, and they were really impressive. So that's kind of the beauty of it.
And are you guys seeing Web 2 founders and like college students kind of come into this space, or are we just kind of recycling Web 3 devs?
Yeah, I would. So there's some things to be bullish and some things to be bearish when it comes to that. I would say, yes, there's a steady stream of Web 2 talent getting into crypto now and over the last couple of years. It's just kind of ever since I'd say the FTX collapse, has been going up steadily, especially in the last year. So really happy to see people from, San Francisco or Berlin or London, New York, leave their Web 2 jobs and try their hand in Web 3 and crypto. I would say the things that we've seen through our data that has been going down is college students. So that has actually been going down pretty over time, over the last, I'd say, 4 or 5 years since we've been running the hackathons. And I think that can just basically be because of the AI boom and all the opportunities happening there. It's just pretty dominant in university campuses. And so we're trying to get people to get interested again. We've like CS has been a way to get in front of students. But yeah, it's a little bit of a challenge just with all the opportunities in AI. So that's been a little bit of a focus for us for the last like 6 months.
And how do you, I guess, do you guys see that as a problem for you to solve? And if so, like, how do you go actively try to recruit new devs?
Yeah, usually we don't think it's our job to be the ones like telling people why they should care about crypto. We just want to be at the very top of the funnel when someone has gone through the process of being like, okay, I care about this, I care about decentralization, I care about like, how I could use this technology to solve this problem. And we want to be there to basically be your like first kind of engineering sprint to get into the ecosystem. However, like it doesn't seem to be happening on its own. And I think that's a problem, not just for us, but a problem for the whole venture ecosystem, the whole crypto ecosystem over the long term. And so we have started to try to think about ways that we can sort of educate students more and more to get them to at least like dip their toes into crypto. Because I think the one thing that's cool about the hackathon is, and we've seen this with Web 2, where it's like you just spend like a week, nights and weekends for a few weeks playing around with the technology and seeing what you think of it. And I think that's what usually hooks sort of played around with the technology. And so we're hoping with students it would kind of be the same.
So I'm curious, you've run a bunch of these hackathons, and I'm assuming there's quick iterations on your side as well on how to make them better. So what have been some of the learnings you've had there, and how's that iteration evolved?
Yeah, I'd say one big thing is just, and this is pretty different than most hackathons, is that we've completely removed all bounties. So we don't have specific sponsors say, hey, you have to build with this particular technology and then you get this prize because of it. It's much more like, hey, bring whatever problem or startup opportunity you want to like go build and do your first engineering spin around, and then use whatever tools you need to get that done. And we do a fair amount of work with the Solana Foundation on providing that set of tools that are a little bit more agnostic. So I think that's one big thing. I think the other big thing is just, attaching sort of a venture fund to this has seemed to attract. Using the hackathon is less of an ephemeral thing, but more of a jumping off point. I think this has been the problem with hackathons so far. I mean, traditional hackathons is that, hey, you go to this thing, you drink some Red Bull, eat some pizza, build something, maybe a proof of concept, and then you forget about it after the thing. That's still useful. I still think there's like really increasing the startup ecosystem. Like you really want those founders who are sort of mission driven and are looking to like build long-term startups. And so I think attaching sort of a venture fund and that being the carrot, not these like cash prizes, even though we do offer quite a few cash prizes, the best founders don't even after the hackathon, they don't even ask us for like the 30K prize. They just want this pre-seed funding basically.
Cool. So you tweeted last week that the vision of internet capital markets won't be realized until tokens are governed by future key. Can you first define future key for us for the uninformed, and then ultimately tell us what your vision is here?
Sure. So yeah, this is an idea that goes back quite a bit of time. It's this guy named Robin Hanson, who's an economics professor. He's actually one of the guys who created sort of like the AMM model early on. He didn't implement it in Ethereum or Uniswap, but like he was the one who kind of like theoretically thought about it. And so he's had a few prediction markets also from him. And Futurarchy is sort of his, I guess, like markets-based governance framework. And basically how it's manifested, at least in the Solana ecosystem, is through this project called MetaDAO, which basically it'll basically any size to, instead of making decisions based on like one token, one vote, which is traditionally how like a DAO would make decisions, it basically says, let's create a market to determine what decision we should make by basically saying, like, I think the classic example is like they always use Amazon, where it's like, should we fire Jeff Bezos or should we keep Jeff Bezos as CEO? And then you split basically the stock into two markets and you say whatever price is higher at the end of sort of like the market-based time period, we'll just go with that. That's obviously a better decision because the market is pricing Amazon stock at a higher valuation, assumingly if they keep Jeff Bezos as CEO. But if it goes the other way, you fire him. And so extrapolating that out to decision making, with with projects of crypto is basically the idea of it. And we think that there's a lot of interesting things that we've seen in practice since MetaDAO has rolled out that we'd like to see more of that would help enable internet capital markets, which is also probably needs a definition because it's like means a bunch of things to a bunch of different people. So yeah, happy to talk about any of that.
Yeah, so I think I replied and got some great views on this because I think people agree with me here, even though maybe it's not the most fair characterization of what you're getting at. But I think I tweeted, "Nah, man, decentralized decision making for pre-PMF companies is not the solution."
Yeah.
I think in your reply to me there, you're saying that's really not the point that you were making. So I'm curious, from like a token holder investor protections perspective, how do you see Futurarchy being applied here, especially in a way that doesn't deeply complicate the early decisions that these founders need to make, long into their product journeys?
Yeah, let me just like reiterate kind of maybe what I was trying to say with that first, and then I'll get into like the investor protection part. So you're right, like early stage startups, like the founders need to be dictators, right? They need to be making all the decisions. They're going to be making really tough decisions that probably people don't even understand why they're making that decision because of like the 1% chance that it works. It's going to be like, it's going to help them find product market fit. So I think with Futurarchy or any sort of governance, corporate governance kind of process, you want to create as least friction as possible for founders to like make decisions early on to find product market fit. That's the same with Futurarchy or any other governance model. I don't think you should be putting up a token holder vote for everything that you should be doing, right? As an early stage startup. And so I'll just say that the way that the decision making is important is like core, maybe like board level decisions. So should we launch a token? Should we issue equity instead of a token for the of the business? Should we fire the CEO? These sort of like board level decisions that are like existential to the startup itself in a sense, like from a governance standpoint, is something that I think even early stage startups should look into. And how that manifests for token holder rights is that I actually believe there's maybe a little bit of a meme that's like representative of this going right now, is that you see basically very few startups in crypto return capital back to investors if things aren't working. You see this all the time in Web 2. This is very common. Someone raises capital, right, for an idea. They get somewhere down the road. It doesn't work out. There's some still enterprise value left in the business. And then they return that capital back to investors. This doesn't happen in crypto for a variety of reasons. And I think one thing that Futurarchy is good for is that it can enable more protection on investors when it comes to this. So if someone tries to rug investors, right, they try to abscond with the funds through like a governance proposal, the market's really good at like, cutting that out and basically being like, no, you can't do that. Even founders can't do that. And so I think, this is something that I want to see happen and because of this, and there's also like things around, so the classic example of like Uniswap, right? The revenue of the business was never returned to the token holders. It was always went to the equity of the business, right? And so things of that nature, where if you're an investor in the token, you're like, what the hell, man? Like, I didn't get any of the actual enterprise value of this business, right, flowing back into the right hands. And so things of this nature, where Futurarchy can kind of determine what you should actually do, that would be the interest of the investor and honestly the founder long term. I think it's really good for that. And so my thesis on this is that there's actually just not that much capital on chain because of this problem. Like really large institutions or like funds who would be the ones who would want to, like, let's say buy like a Series B or C level startup and their token, are not investing in these things because there is no investor protection for owning the token itself. And so either you can do this through law, right, where you have to go through the process of Congress and SEC, and like it's kind of a mess to get these things approved. And the SEC doesn't even understand really crypto as far as I understand, especially like the more bleeding edge stuff. I think they maybe understand Bitcoin and maybe Ethereum or Solana at a high level, but the bleeding edge, they don't know yet. And so it's going to take a long time to get laws in place. So what sort of on-chain governance mechanisms can we implement today that allow for these like investor protections? And I think Futarchy it could be one of those things that I would love to see more of. And I think we've seen that with a couple good examples. So I'll pause there, see if you guys have any questions.
I mean, I'm curious what, if you're looking at Futarchy through the lens of Colosseum, I'm curious both when you would think about starting to implement it and hypothetically what it would look like.
I would start it when you're thinking about launching a token. I think that's a pretty big decision that when you decide to basically go public in a sense of having retail or really any investor own, a token that you issue, there has to be some embedded protections for those token holders that because I think most people believe that they're not just meme coins, right? Like if I'm buying Uniswap token, I'm buying it because I believe in Uniswap doing well as a business in the future for the most part. I think that's what the expectations of most investors were when they bought Uniswap uni tokens, right? And so I think whenever a business, small or large, decides to launch a token, I think that's when you have to have that governance mechanism in place. Just like when you IPO, there's all sorts of governance mechanisms you need to have in order to go public because of investor protection laws. There's auditing, there's financial reports, there's all sorts of things that need to get built out. And I think Futarchy is one of those components for all token teams.
And then what would be, maybe they're the obvious ones, like should we fire Matty because he's not doing a good job? But what are some of like the kind of weirder use cases of Futarchy within the Colosseum ecosystem that you can imagine?
Yeah, I think it gets really interesting later stage. I think actually what's interesting about Futarchy is like, and maybe this is kind of what Jess was trying to get at, is that for early stage startups, they're pretty good. Like they make pretty good decisions. They're fast moving. They're trying to find product market fit. I think what's interesting also about Futarchy that is really good for like a little bit later stage teams where, I used to work at Google and Square, which are pretty big organizations, and you would be surprised that everyone in that organization is not making decisions based on increasing shareholder value of those businesses. There's all sorts of office politics and differing incentives based on compensation. Maybe even like the board isn't necessarily even aligned sometimes for various reasons. Maybe they're on the board of other competitors. Like it's just a mess. And so these things become quite stagnant and weighed down by bureaucracy because of the decision-making process often. And so I think it's actually one of the interesting things, and I think this is maybe where the theoretical, I guess, like Robin Hanson views of this came to be, which was like, how do we make large organizations more incentive aligned to actually like increase shareholder value? And so I haven't seen that yet. I guess to answer your question, I haven't seen that yet with crypto projects, but I think that's something theoretically I'd love to see play out.
Yeah, I mean, I think that there's, in my mind, an equal likelihood that the market-based dynamic introduces some other version of that in the decision-making process. Yeah, you can imagine, I guess, a few things. One, the scale required or the volume required to actually get to a good answer here, it would maybe be a big limiting factor here. So how many, in governance generally, how many people are actually interested and knowledgeable enough to go and have an opinion here? And I think it's an interesting argument that a market-based approach is better than single token voting. I'm curious how much that changes. And then I think that the second piece is now you're trading on an open market where your competitors get to participate in this in a certain way, and sort of like the decision-making dynamics that exist there are far less aligned in many different ways. So maybe it solves the problem for more of an internal alignment, but all of a sudden it introduces these external issues.
Well, the beauty of that, though, I think, maybe something people don't know about Futarchy or how it actually fundamentally works is that if the market is tipping in a way, let's say a competitor like Google is like, great, let's fire Jeff Bezos, like they're a competitor, let's just get him out of there. And so they try to like heavily prop up the other side of the market. You're just making money for traders who actually, the more that the decision is going away from actually like where actually the market should be going, basically gives traders an opportunity to make money from that. So the larger that gap is, the more there is an incentive to come in and actually like change the outcome of that decision.
There's
Which
a
I
sort
think
of
is like
scale required here for that to make sense, though, right?
When we've seen it, yes, obviously the more liquid markets, the better this is like bulletproof. But even at a pretty small scale, so like MetaDAO itself uses this mechanism for itself. And there have been many times where people have tried to swing the market in a way that would benefit just maybe one person versus like the enterprise value of MetaDAO. So very early on, one thing that convinced us to invest in MetaDAO was there was a proposal by this guy named Ben Hawkins from the Solana Foundation, and he was trying to basically break the system. He was trying to do what you were saying, where he was going to like borrow a bunch of capital and basically be like, hey, Ben Hawkins wants to buy like, I forget what the number was, but it was something really huge, like 30% of all tokens for some ridiculous discount. And he was like borrowing capital to prop up that side of the market. But that just created an incentive for people to come in and basically push the market the other way because of this, like, this gap in reality. And they could see that he was doing this basically, or this one actor or set of wallets was doing this. And so I don't know. I don't think it's perfect. I just think it's much better than the outcomes that I've seen with token holder voting. And maybe a difference that I have is that I don't actually think participation rate is like the thing that should be optimized for. I think it's enterprise value is what should be optimized for. And I think that sometimes mean that maybe some very well-informed people who are trading in those markets would know better than the masses through token holder voting.
I mean, I think anything that turns governance into an entertaining kind of consumer-like experience is a worthy design space to go explore. So I think that's kind of the thing that excites me about FutureKey the most.
Cool. Yeah.
Yeah, I think that's interesting. I mean, yeah, we're seeing markets here from a couple $100 all the way up to multiple thousands of dollars. And it's kind of interesting to even just look at the charts. I'm on metadao.fi right now, poking around a little bit, and you can see consensus, and then you can see something changing, and then you can see it kind of resolving back into the norm in an interesting way. Okay.
Yeah, I think it's still, I mean, obviously very experimental, very early days for this. I think there is problems with liquidity. So currently it's kind of like an order book kind of like model. They're trying to implement an AMM to get more liquidity. And so there's things at the edges that need to be ironed out. So it's definitely not, perfect, and it never will be. I don't think there is a perfect governance system. You can just kind of get better than the next thing. And I think something needs to change there, or like I said, like the capital sitting on the sidelines that wants to participate in these markets will never come on if there's not stronger, basically, investor protections at the token level. And I think it needs to be enforced like on chain, basically, in my ideal world. So excited to see how that manifests.
Yeah, I think that's interesting. I think the confidence in investor protections, I think, is one piece of it. But I guess if you were to sort of think about solving that, investor protection piece from a regulatory perspective or from an on-chain mechanism, which one do you think is going to bring in the most capital? Just assuming we can magic wand it.
Oh man, probably a lot of lobbying through like U.S. regulations, but that's going to take so long. Even with the change in regime and the positive things that are happening, maybe I'm just a little bit of a cypherpunk at heart. I actually do believe in like sort of the verify don't trust type thing, where I actually see in the future a lot of this getting encoded on chain and that becoming a lot more comfortable with people, just as people got comfortable with there's a Bitcoin block every like 10 minutes, and there's a set of rules that these protocols have that just because it's enforced through the code, through open source code, that this will happen. And so I think, I think that's sort of where the industry will end up. And I think that's for the better, to be honest.
Yeah, I think you see a lot of the discourse online around, say, governance or even the underlying value of crypto, and I think it just really shows how little experience people have in how these organizations are ultimately operated. What a venture, like venture market, what. So we're in Canada here, and if you go with the TSXV, the governance and the rugging and all sorts of weird shit that happens in these companies is astronomical. And I think we can maybe see that happening on chain and see it in a much more visible way and can see the issues with it. But these issues persist across the entire economy in very different ways. And so I think that alongside I know there is a lot of excitement around the Market Structures Act and the change in the administration in the United States. Yep. But when you think about the actual process of moving those laws forward, we're talking about multi-year process here, even just to take, assuming that these laws pass, to actually get them written into the rules and ultimately distributed into companies that are actually operating there. So,
and then what if they don't follow the rules? Like people, I mean, like I think you maybe kind of alluding to this, but like the U.S. equities has a ton of regulation, and people are breaking those laws all the time. Like, so it's like, I think one of the cool things is like just embedding these rules in code. And I think the industry will kind of push that way over the long term. But again, you're right. Like, I think rules of nation states matters a lot as well.
Yeah, I think it's fascinating. All right, we're going to have Metaprofit on later this week. What's the smartest question that we can ask him to really get to the heart of what they're building there?
Oh man, ask him what he thinks of internet capital markets. I think this is like a discussion that the industry should have more of. Like I see that word all over. I guess it came from Akshay at the Solana Foundation.
We've had on recently. Yeah.
But I think it's like been so obscured of what like the original meeting actually is. So he has an interesting take on internet capital markets. You should ask him about that.
Yeah, I think it's a Rosarch test. God, how do you pronounce that word?
Yeah.
Nobody's going to willing to take it. All right, boys.
You're on your own there. You're on your own there.
Awesome, Matty. Well, great to finally meet you, man. And I've been very impressed with how you guys have been moving over at Colosseum. People say great things about it. So if you're thinking about building something, make sure you get on over there. I think you have rolling applications as well, which I think is a smart move. And thank you for helping us be a little bit smarter on Futurarchy and kicking off this hopefully more nuanced conversation about ICM, because I feel like I lose a bunch of brain cells every day engaging in reading some of the timeline takes here. But I think, we had Akshay on a couple weeks ago, maybe a month ago, where he sort of dove into like the official definition, or at least where he was coming from it. And it is majorly different than what I think the average timeline pursuer has in mind. And I think still represents a pretty big opportunity, especially if we can make meaningful progress to it. So appreciate you hanging out with us today.
Yeah, I appreciate you guys inviting me. I love this show. Watch it most days. So keep going.
Awesome, brother.
Thanks,
you.
Man.
All right,
Peace.
Bye.